If you do a Google search on Darvas box, you will see many examples of indicators purporting to be Darvas box indicators. Unfortunately, 99% of them got it wrong. If you read Nicholas Darvas's book, How I Made $2 Million in the Stock Market, you would see that he clearly illustrates that all boxes must be the same height. In the boxes you find in the Google search, they are all of varying heights. That type of box is worthless. What you want is a consistent box that is not violated by time, but by price movement. Actually, what Darvas did was create a point and figure chart, only better, in that with the real Darvas box you can see the box forming and thus see in which direction the next box will present itself. With my Darvas box indicator, the user can determine how many points he wants each box to contain. In the example shown here, I set the indicator for each box to contain 4 points without regard to time. The longer it takes the equity to move 4 points, the wider the box becomes, but the height of the box always remains the same. This is a recent view of the 5-minute ESE Mini. Darvas box trading is made much easier by the use of my time series forecast, which you can see right here. When a new box is formed, if the bottom of the new box is above the magenta line of the previous box, right in here, that is a good indication that the equity will be moving higher. Also, you can see in the time series forecast, the histogram turned green well before the new box formed. So you can see you have an advanced view of which direction the equity is going to move. You can also see here in the dynamic overbought and oversold lines, the blue line, which is the overbought line, moves down here prior to any major up move, and you can see this predicts that the equity is going to be moving up. You can see this box formed the bottom below the magenta line, which is a good indication this equity is not going to move much higher in here. Also, in this part of the box, you can see that the histogram already turned red. The oversold line, the yellow line here, moved way up here, which is a very good early indication that the equity is going to move down. Now here you can see the top of the next box form way below the magenta line here, which indicates the equity is going to be moving down, and as you can see here, that is indeed what happens. So combining the time series differential indicator with the Darvas box indicator makes a very clear presentation which way the equity is going to move, and you have a good idea of that even before the move occurs.